Greetings, and welcome back to the podcast. This episode, we are joined by Mr. Hal Kvisle, Chair of the Board at ARC Resources, Finning International, SouthBow Energy, and Director for Cenovus Energy. Mr. Kvisle was also CEO of Talisman Energy from 2012 until 2015, and from 2001 until 2010, he served as the CEO of TransCanada Corporation, now TC Energy, where he led the North American energy infrastructure company through a period of growth and transformation, which included the commissioning and startup of the Keystone Pipeline. Prior to joining TransCanada in 1999, Mr. Kvisle founded and was the president of Fletcher Challenge Energy Canada, a successful Canadian upstream business with ventures in Venezuela, Argentina, and Mexico. And prior to that, Mr. Kvisle held engineering, finance, and management positions with Dome Petroleum. Mr. Kvisle was named Canada's CEO of the Year in 2008 and selected to the Canadian Petroleum Hall of Fame in 2012. In 2021, Mr. Kvisle received the Institute of Corporate Directors Fellowship Award, recognizing individuals who have made outstanding contributions to Canadian enterprises through their governance and leadership. Mr. Kvisle is the founding chair of the Business Council of Alberta and the former chair of the Interstate Natural Gas Association of America, the Mount Royal College Board of Governors, and the Nature Conservancy of Canada. Mr. Kvisle holds a Bachelor of Science degree in Engineering from the University of Alberta, an MBA degree and Honorary Doctor of Laws degree from the University of Calgary, and an Honorary Doctor of Laws degree from Mount Royal University. He is also a Fellow of the Canadian Academy of Engineering. Among other things, we sat down to discuss structuring quality M&A deals, the $2 trillion of natural resource wealth in Canada, and common sense energy policy. Enjoy. This podcast episode is sponsored by Conate Water Solutions. Do you need cost-effective water sourcing options to supply your next drilling or completions program? Conate Water Solutions is a specialized hydrogeology company focused on water well drilling, testing, and water management services in Western Canada and Texas. Contact info@conatewater.com or check out conatewater.com for more details. This episode is brought to you by the Canadian Gas Association. The Canadian Gas Association represents Canada's natural gas delivery industry, whose members include distribution companies, transmission companies, equipment manufacturers, and other service providers. The Canadian Gas Association members deliver safe, reliable, and affordable natural gas to meet 38% of Canada's energy needs. Visit cga.ca to learn more about Canada's natural gas. This episode is brought to you by Canada Action, whose belief is that the Canadian oil and natural gas industry is a force of good in the world, and that history will look back upon the sector favorably. Canadian energy plays a critical role in our society by reinforcing global energy security, underpinning Canadian economic prosperity, and setting the benchmark for environmental leadership. Get your free stickers at buildcanadaup.ca to show your support, or follow Canada Action on social media. Our final sponsor for this episode is brought to you by Garrison Strategy. Tim McMillan and the team of highly experienced partners at Garrison Strategy excel in guiding companies through the challenging landscape of the oil and natural gas industry. With extensive backgrounds in political, regulatory, and association leadership, they're your go-to experts for understanding and navigating Canada's shifting energy policy. Visit them at garrisonstrategy.ca. Good morning, Mr. Kvisle. Thank you very much for doing this. I really appreciate your time.
Happy to do it, Trevor.
I know a lot of people out there will also appreciate your time, so thank you. You're also very patient, too. When you emailed me the only day that you couldn't do this recording, I read the email too quickly and responded back and suggested that day, so.
That's the way it goes sometimes, yeah.
Thank you for being patient. Also a big skier.
Yes. I've skied a lot over the years, so I'm slowing down a little bit on that front, but still trying to keep at it. And
to start light, favorite ski hill maybe, just to get things going.
Yeah, I'd have to say that the hill I've skied on more than any other would be Lake Louise. I've probably skied, I estimate it was close to 700 days over the years at Lake Louise, and all of my kids learned how to ski at Lake Louise and were part of the different Lake Louise Ski Club programs. So I have a long history and a great affection for Lake Louise. But these days, about 10 or 12 years ago, my family and I bought a house on the hill at Kicking Horse. And this was spurred by my son, who's quite an accomplished skier and does a lot of different things like that. And he raved about the hill, and so we bought the place. And I've skied a lot at Kicking Horse in the last 10 years, and it's a pretty good hill.
Mm. Hard to beat a sunny day at Lake Louise, though.
Yeah, Lake Louise is just a great asset, and a lot of people use it, and there you go.
You are technical by training, an engineer, if I'm correct?
I am an engineer, and I wasn't originally planning to be. I was originally planning to do a degree in economics or something like that, and then hopefully go on to law school. But I was offered a summer job working in the laboratory of a Shell refinery, a small Shell facility near Innisfail, where I grew up. And it was a much better job than stacking lumber at the co-op, which was my alternative. And while I worked there that summer, the people there convinced me to switch and do engineering instead. And it was one of the best bits of advice I've ever had.
You are technical by training, but a lot of people would describe you as charismatic, a good communicator, more or less. Have you always been like that, or did you have to work on it through the years?
Well, I don't know that I'm particularly charismatic or anything else, but I think one of the things that evolved over my career was I just became more comfortable and more confident and less nervous about taking the lead in a conversation. When you're a young engineer in a very accomplished company like Dome Petroleum was at the time, with a lot of high flyers, you can get a little bit intimidated. And of course, like anybody, I was a little bit nervous about saying too much too soon. But over time, I kind of became comfortable with that, and I think that's been helpful to me.
To rewind the clock a little bit, you kind of touched on it, but how come and why energy? How did you get into the sector in general?
So it all started with that summer job at a Shell refinery. And the people at Shell told me, they said, look, if you'll go into engineering instead of whatever else you were going to do, we'll give you a good job every summer for 4 months, and that'll help you get through university, and then you could consider coming to work for Shell full-time when you graduate. So that's exactly what I did. But at the time I was graduating in 1975, there was this remarkable company, Dome Petroleum, that was actively drilling in the Beaufort Sea and developing a very cross-country liquids, propane, butane extraction and marketing business. And I had become interested in Dome because some friends of mine were investors in Dome, some friends of my family, actually. So when they offered me a job with 15% more money than Shell was offering, than anybody else was offering, I actually was the first new grad engineer to ever go to work for Dome. And it was quite a remarkable experience. There were 330 employees there when I joined. I was number 331. And 6 years later, there were 6,800 of us. So it was just an incredible period of explosive growth at Dome. And it was a great benefit to me to be part of that.
Fast forward to today. You haven't had to work for a while, but here we are. What motivates you nowadays to keep working?
I think, first of all, I and many others were very lucky to get into this very sophisticated, complicated, financially significant business called oil and gas here in Western Canada. And I had a terrific 35-year, very interesting career. So that when I was kind of winding that down and thinking to spend more time at the ranch and do things out in the country in 2010, that's when I retired from TransCanada. And I looked around and thought that, I'm going to take a couple of years and I'm going to do some work for the government of Alberta on environmental monitoring, which I did. And I'm going to continue to focus on the boards that I'm on. At the time, it was really ARC Resources and one other small company. And over time, I found that I kind of missed the people and the interesting topics and the discussions that occur in downtown Calgary. Oil and gas is an enormous business. It's by far the biggest industrial value chain in Canada, and we're very lucky to have the assets, and not just the oil and gas reservoirs and the pipelines and all of that, but one of the great assets are the people. And we've developed this tremendous depth of both technical and business expertise in Calgary. And I'm just kind of reluctant to walk away from that. I enjoy doing things, having discussions, giving advice, receiving advice, all of that. It's just a great industry.
Sometimes people at your level of the food chain, with your level of experience, have had success in the past. They don't update their thinking and they rely too much on the success of the past. But you, on the other hand, have continually updated your thinking and kept working on new projects. Have you thought of it that way? And how have you been able to do that?
Well, I think curiosity is a great driver of gaining more knowledge. And I've always been very curious about what makes the great companies in this industry succeed. One of the attractions in joining the board of Cenovus was that I had long observed and studied and admired what Cenovus was doing on the steam injection front. Back in the 1990s, when I was working for a company, Fletcher, a New Zealand company, I gained a bit of exposure to Southeast Asia and to some of the big things that were going on in the industry in those countries. And there was a fantastic operation called the Dury steam flood, which was the largest steam flood on Earth, and where companies like Talisman were major suppliers of huge volumes of natural gas to fuel the boilers to get the steam into the ground and the oil out of the ground in Sumatra. So here today, Dury is no longer the world's largest steam flood. You have things like Christina Lake and Foster Creek at Cenovus, and Firebag at Suncor, and Surmont, which is now going to be 100% ConocoPhillips. These are remarkable operations, and every one of them is bigger than the Dury steam flood. And what Canada's accomplished in technical terms in steam-assisted gravity drainage is one of the great technical achievements of the industry ever since John Rockefeller. And we did it all. We did it here. It was Calgary-based. It was Alberta figured out. It was Fort McMurray implemented. These are great stories. And so I've tried to stay up to speed on how that goes. I'm also quite involved through Finning in the mining side of the oil industry, where we're big suppliers of Caterpillar equipment for that. And the progress, you look at the Imperial Curl project and how they've gone from struggling a bit in the early days at just under 200,000 barrels a day to quite recently breaking 300,000 barrels a day, and doing it all with a truck fleet of about 80 of those big 400-ton trucks, every one of them operating autonomously with no drivers on board. It's just a fantastic bit of technological progress, both heavy-duty machinery that has been engineered to a very high degree, but backed up with digital systems that are enabling these trucks to run around in the mine without drivers and operate to a very high degree of efficiency. And then you come to the gas side where, Trevor, I fracked my first Montney well in about 1984. It was a well that Dome Petroleum had drilled right around the Alberta-BC border. And we were actually going after a zone called the Halfway. But as we drilled down, we encountered this very thick section in the Montney. And so we said, well, we have some Montney equivalent over at Kaybob that produces quite successfully because of some unusual high permeability. We don't see that high permeability here, but let's give it a try. So it was a vertical well. We put at the time what was considered to be a pretty big frack into it. And we made natural gas, but woefully uneconomic. So, well, we're not going to do that anymore. And we went to complete the Halfway, which was the primary zone. But that was 1984. Since then, we've learned as an industry to do two things that we couldn't do back then. One was go down and drill horizontally for 1 or 2 or sometimes 3 miles horizontally. And the second was to do this business of multi-stage, very large fracks in the horizontal section. So on the gas side, that horizontal drilling and fracking has been the major breakthrough. On the oil sands side, I'd say the efficiency of mining operations, number one, and the remarkable achievements on SAGD and steam injection. These are really interesting technical things. And then you've got all of the sophisticated pipelining. You know, I like to point out to people that the two most accomplished pipeline companies in the world are TC Energy and Enbridge. That there's lots of other big pipeline companies in North America, but they generally got there by buying other pipeline companies. TC has built more big pipe, more tonnage of pipe by quite a wide margin than anybody else in North America. And so I got to know that team pretty well during my 11 years there and really admired the people that could do that. Learned a lot about the technology employed there. So yeah, I'm kind of keen on technology. And by technology, I mean the whole spectrum, not just the digital stuff.
Leaning into innovation and technology may be one of the secrets to your longevity.
I think so. I think in every company I've been involved with, innovation has been a pretty big part of it. And even in a big, very asset-heavy company like TransCanada, there were small pockets of people that were innovating on both the technical side and the business side. And I think I really encouraged that and stimulated that and got the company to get into a number of new things. I didn't do it. I just encouraged people to do it. Yeah.
Like we said, you're a good communicator, but as CEO/chairman, sometimes you need to be forceful and maybe pound your fist on the table to get things done. How do you balance that with being charismatic and somebody people like with good leadership?
I think the key thing to focus on there is something I call decision quality. And, you know, boards are confronted with all kinds of complex issues and being asked to make decisions to approve this big project or that big one, or sometimes to sell a business or whatever. And over the last 20 years, there's really emerged and developed quite a science of decision quality about have companies examined all the right alternatives? Have they done the right analysis? Have you really dug in? Do you understand the risks? And so most of the time when there are disagreements at the board or where management and the board disagree, it's because there's been a breakdown in that process. So to me, it's not a case of pounding my fist on the table, but it's a case of saying, well, let's step back. Have we actually looked at all the right alternatives here? Have we done the analysis so that we know which is the right one? Do we have a team in place that's capable of doing it? Have we understood the risks? And do we have the financial capacity, for example, to work our way through this? So, you know, you can sort of diffuse disagreements and get everybody to the right spot in these kind of decisions if you go about them in that methodical way. And that's what's always worked for me. I've been involved in very few situations where there was yelling and screaming and banging on the table. I do remember one was when I was a board member of a royalty trust called Prime West, and we were looking to sell Prime West to another company, and the other company was not progressing as quickly as we wanted. They were kind of dropping the ball on some elements of the deal. And there were members of our board who got very irritated by that and said, let's walk away, to hell with these guys. And I said, now hold on. Let's just calm down, work our way through this and not walk away from what's going to be a very good deal. And so sometimes that kind of calmness, I think, is helpful around the board table.
On the other hand, the problem is some people get ahead by yelling and screaming and pounding their fist, and it's effective for some people. When you look back on things, have you found that a more calm and measured approach has been more effective through the years?
Yeah, I think so. And I experienced that both at Dome, where there were very aggressive people that were always pushing the envelope, and ultimately it was that attitude, that pushing the envelope attitude, that led to the end for Dome. They got caught by acquiring Hudson Bay Oil and Gas for a pretty rich price, but the deal itself worked out fine. What didn't work out was the way they financed it. And rather than issuing equity at what would have been a very attractive equity price for Dome to issue shares at, they decided to take on a couple of $1 billion of extra debt. and that ultimately doomed the company. Now, on that debate, there were people that were pounding the table and saying, we're going to drill wells in the Beaufort Sea and make enormous discoveries, and this stock's going to be worth $100 a share. There are other people who said, well, hold on, we don't know any of that, but they got talked out of the room. So there was an example of a company that went the wrong way as a result of aggressive thinking by some people that was actually beyond what the numbers would support. So for me, so much of this boils down to understanding the numbers, whether it's production forecast or cash flow forecast or balance sheet items. Most of this comes out in the numbers, and you've got to let that rational kind of cold logic prevail over emotion and things like that.
Seems like sometimes the people that beat their chests the loudest in the long term don't end up in the best situation.
Well, we see lots of history of train wrecks in the Canadian oil and gas industry over time. I know that my predecessor as the chair of ARC Resources, Mac Van Willigen, used to point out that only about 1 in 20 companies that get started up in Western Canada actually survive for 20 years. They get taken over sooner or later. And, it's interesting. Just this week, we see Enerplus being taken over or merged into a U.S. company, Cord. And that doesn't surprise me because most of Enerplus's assets are in the U.S. But it's a company, Enerplus was the original royalty trust company in Western Canada and has a history going back to about 1990. So these things happen.
At certain companies, the chairman is a figurehead, more or less. But at others, you're not really sure who's running the show, or the CEO or the chairman. In your opinion, what strategy is the best one? Is it a balance between the CEO and the chairman, or do you think there's a right way to do it? How do you approach that?
Well, I like the way we do it at ARC here, where the CEO clearly runs the company. That's not my job. And my job is to be there as someone that the CEO can discuss complicated issues with. My job is to give him some advice for a course correction from time to time. And my job is to make sure that there's a good and constructive relationship between management and the rest of the board. So I tend to work on all of those things. When I see other companies that in the U.S. model, the chairman is often the CEO, the chair of the board. Those two roles are combined. And then they will have someone filling the role of lead director who does a number of things that I try to do in my role as the chairman. I like the Canadian model. I think it's good. I've seen companies where the chairman puts in very little time, shows up 5 or 6 times a year to chair a board meeting, and that's about it. At the other end of the spectrum are the executive chair roles where people put in a lot of hours and are very heavily involved in certain aspects of the company. With Terry Anderson here at ARC, I've really tried to find the middle ground where Terry and I have a great relationship. He was new to the CEO role when we promoted him into that. And so I hope I've been able to be helpful to Terry, and things have worked out well so far. So I think our kind of casual but frequent interaction role is one that works pretty well.
You have been the architect and or influential for a lot of very successful deals the past 30 years in Canadian energy, from Cenovus, Husky, Kona Waterous, TransCanada Rescue, Repsol Talisman, Fletcher Challenge. So maybe to touch on high level, the recipe, so to speak, what to you makes a good deal, and how do you think about that?
Well, Trevor, I've worked for a number of really great companies, and at Dome, I was exposed to big M&A transactions in the oil business at a pretty high level. Dome not just acquired Hudson Bay, but about 10 other companies during the time I was there, and analyzing them and acquiring them and integrating them and all of that was great learning for all of us that were at Dome at the time. But where things got really interesting for me is when Dome was acquired by Amoco, I decided that I wanted to stick to Western Canada. I love Alberta, and I wanted to really focus on the Western Canadian industry. And rather than go to the U.S. or somewhere else with Amoco, I decided to leave. And I spent a couple of years doing a little consulting work for friends, building a gas plant for some people that needed some help with that, those kind of things. But what I really wanted to do was establish a new company. and start something at a small level, but do it in a significant way. Some people will start small companies and really struggle. Their whole primary activity becomes raising finance. So when the opportunity came to put some deals together for a big international company, Fletcher Challenge, and help them initiate a business from scratch here in Western Canada, that had a lot of appeal to me because obviously they had the money. They had made a commitment that they wanted to grow a business in Western Canada, and they didn't have a starting position. They had no team of people, no assets, nothing. So job number one was to really spend a fair bit of time with some pretty sophisticated people in New Zealand discussing what the options in Western Canada were and what they might think about doing and what's the right entry position. And, that was a fascinating experience for me because if I was working for a Calgary existing company, they've landed all of that. They've thought about that. They've talked about it. They've gone in their particular direction. But this was a great opportunity with Fletcher Challenge to be able to explore what should it be? Should it be gas? Should it be oil? Should it be infrastructure? What sort of business model? How big? Where do you sit in the cost structure? Is it just going to be an upstream production or will it integrate into downstream markets and things like that? So understanding that quite sophisticated lay of the land and delivering for them and really creating almost $2 billion in value for Fletcher Challenge over 10 years was a great experience for me and a great learning process. I learned a lot working with those people. And then in 1999, I knew that other parts of the Fletcher Challenge empire, mostly pulp and paper, were becoming a huge burden and were going to pose a threat to the very existence of that company. And it became clear that they were going to sell the oil and gas business to try to fund their way out of that. And so that's when I decided to leave and go to TC.
It's really hard to summarize these things, but like we mentioned, you've been influential in so many successful deals. Is there one or two points you like to think about when creating these things, or is there a framework that you...
Yeah. You know what? At Fletcher Challenge, I learned that the quick assessment of an acquisition deal using rules of thumb works for some people some of the time, but there's really no substitute for deep geological and engineering analysis of the opportunities. And there were two people at Fletcher Challenge that really impressed that upon me. And there were two people in the Canadian team, two guys that worked for me. One was Brian Macbeth, our exploration vice president. And Brian was a very, very thorough geologist. He worked things to a great deal of detail. And when we were looking at acquiring different assets, he took that on and he did it very, very well. The other fellow was Mark Taylor, who I had worked with a lot at Dome, is one of the great reservoir and operations engineers in our industry. And Mark ultimately succeeded me as the president of Fletcher Challenge Energy Canada when I left to go to TC. But his depth of understanding of both operating issues, but also reservoir issues and all of those kind of things. What I brought to the table in all of that was kind of the corporate strategy side and the downstream marketing side and the things like that I'd learned a fair bit about at Dome. So between the three of us and of course dozens of other people far too many for me to mention all of them, but it was a remarkable thing. We started out with three of us at Fletcher Challenge and over the 10 years grew to be about 300 employees. And I like to say I hired every one of them. I knew every one of those people before they came on board. And that was pretty important in the kind of team that we built.
You remember the day Fletcher Challenge sold? Maybe it was bittersweet because you didn't have a place to hang your hat anymore?
Well, I had actually left before they sold the company, but I left because a good friend of mine, someone that I'd worked closely with at Dome, George Watson, was at the time the CEO of TransCanada. And George had called me up and wondered whether I'd be interested in coming to TransCanada, not as the CEO, but to head up their non-regulated, non-pipeline business. So things like power generation, their gas processing business, their trading enterprise, and some of their international assets. That's what George and I were talking about. So I was never at that stage. After I left Dome, I definitely went 2 years without a place to hang my hat, and I borrowed an office from some friends of mine in the consulting business. But I actually went straight from Fletcher Challenge to TransCanada and landed at TC. This was 1 year after the Nova TransCanada merger, and there were a lot of issues there. I think both companies, to some extent, had counted on the other one to bail them out. Well, we had too much debt, we had too many people, we had a lot of scattered assets that needed to be cleaned up. And so that's what I got into right from day one at TC. Now, George Watson left, actually, about the time I joined. And we had a great man that I think the company owes a great deal to, Doug Baldwin. He'd been a lifelong Imperial Oil Exxon guy that had retired and joined the TC board. And when George Watson departed, they asked Doug to step in as an interim CEO. And Doug served in that role for 1.5 years before he turned it over to me. And I just learned so much from him. He had that rock solid, impeccable Exxon logic that he brought to every decision. And there's a lot for everyone to learn from the way those guys do things.
So when you got to TransCanada, there was problems, to say the least.
Yeah. You know, as I said, too much debt and too many scattered assets. The core assets were fantastic. You know, the NGTL system in Alberta and the TransCanada main pipelines. But we had a couple of different problems. The first was too much debt. There were still too many highly paid people because the two companies had come together and they'd never really sorted out the organization. But we also had a very serious problem in that the Canadian energy regulator, the National Energy Board at the time, was actually quite punitive in terms of the rates of return that it would allow on regulated assets. And above all else, it didn't really recognize that we, TransCanada, were responsible for all of that debt. We did recover our interest expense and things like that in the cost of service toll for shipping gas, but we didn't have any coverage for the risk that what if things go bad and we can't ultimately repay the debt at the time, and the kind of rate of return we were getting just wasn't compensating us for that. So we made a decision as an executive team to kind of minimize our investment in Canada until Canada figured this out, what they were really going to do about it. And that kicked off the remarkable phase of growth in the U.S. at TransCanada that I think back on. There were two big parts to success at TC in my time. One was the growth of the U.S. and Mexican pipeline businesses, and the other was the growth of the power gen business, and maybe most notably Bruce Nuclear, to get involved in Bruce and to satisfy ourselves that we could handle the risks of being involved in the nuclear business. That was a pretty big hurdle for TransCanada and the board to get over, but we did it. And those two things are the things that enabled us basically to triple the share price while I was at TC.
You were named CEO of the Year in 2008, if I'm correct?
Yeah, that was nice.
But these sound like stressful times. If you look back on it, maybe nostalgia kind of makes things a little more rosy than it was, but was that a stressful period?
Well, leading up to 2008 was just kind of one success after another. Things started to get frustrating in about 2008. We'd put 5 years of really hard effort into working with Imperial Oil to build the Mackenzie Valley Pipeline. And we just weren't getting through the regulatory process. And it was very frustrating to everyone at TransCanada, also at Imperial Oil. I just have to say they demonstrated such a tenacious approach to continuing on. But at the end of the day, we had to down tools and set the project aside. That was a big disappointment to me in my late years at TC. The other was that we had done a lot of work with Shell and ConocoPhillips and other companies on what was the craze at the time, which was LNG imports into North America. Shell built a large LNG import terminal in Altamira, Mexico, and at TC we built all the connecting pipelines for that. We worked with Shell on a very large LNG import project in the New York City area, just outside New York. Now, fortunately, all the regulatory delays dragged those projects out so long that we never went ahead with any of them. And then the world changed. The whole fracking game, Trevor, the late, from '06 to '09 was kind of a nervous period in the gas business in Canada because annual reserve bookings in the upstream sector were going down every year. We were producing out and we weren't replacing production, and we had not yet gone into the horizontal drilling and fracking game. So we didn't know that was about to transpire, and we were quite worried about our Canadian pipe business. Fortunately, Bruce Nuclear was going well. We acquired A&R, a big pipe company in the U.S. Maybe the best deal that we ever did in my time at TC was acquiring GTN, the pipeline from Alberta to California. And it's been a real good money maker for the company, and I think will continue to serve them well for a long time. As I like to say, California's not going off natural gas. They just think they are. And that has meant that pipeline's been very successful. They need it. They need our gas.
It's one thing to grow and issue a bunch of shares and blow out your shareholders, not treat them very well, but it's another thing to grow creatively. Were you aware of that aspect of the business at the time, that you had to treat shareholders right and grow in a strategic way?
Yeah, I think, our big sophisticated shareholders were very strategic thinkers themselves. And you always have a lot going on at the margin that can significantly affect the share price from day to day. But you look at the big shareholders, people like RBC Asset Management or Fidelity or Capital Group, those kind of people are very sophisticated in their strategic analysis, and they tend to stick with these companies through thick and thin. You'll have the hedge funds or the activists or the retail shareholders that get in and out based on rumors or, emotion. But we tried to remain pretty engaged with our big core shareholders to understand what they're thinking about the business. What can we learn from them? And then how can we, of course, convey our story to them in the most persuasive way so they remain with us? And, one of the big events was in 2009 when the global financial crisis was getting quite exciting. And we were right in the middle of the greatest building project that I've ever been involved in, building the Keystone Pipeline, the one that got built. Mm-hmm. We were spending about $8 billion to build that pipeline. And we were going through a lot of cash to do it. And then this financial crunch hit, and our normal sources, we weren't sure that they'd be available. Now, our stock had been trading nicely at about $36. And some members of our board said, we need to issue a very significant amount of stock, and we've just got to get it done. And I felt, we're trading at $28 right now because everything had gone down in the financial crisis. I really hate to issue a whole lot of stock at $28 and dilute our $36 shareholders. Well, we crunched all the numbers and thought about it and decided to go ahead and did $1 billion equity issue. It was one of the largest ever done in Canada at the time. And it was remarkably successful. Within a relatively short period, we were back trading close to $36. And we made our way through, and we emerged from the financial crisis, I can say, stronger than we were when we went in. So that was a very tough decision, but it was one that good numerical analysis supported what we wanted to do, and it all worked out for the best in the end.
Nowadays, you are one of the top inside owners at ARC, if not the top, but along the way to create a symmetry of risk with your shareholders. Did you feel it was important to put your own money into companies when you were working at them?
Yeah, I do. I mean, I guess I put it the other way around, that I'm not interested in being on the board of a company unless I'm also interested in being a significant investor. Mm-hmm. So I do like to put my own money into these companies. And one of the things that I do at every company I'm involved with, my annual compensation for being a director or a board chair or whatever, all of it goes in deferred share units. So I don't take any cash for what I do. And some companies that's worked out really well, and some other ones it didn't work out so good, But I think having skin in the game brings a different degree of focus to what's going on in the company. And, you see that with some of the really great companies in our industry, like Murray Edwards and his senior team at CNRL. Those guys have a lot of skin in the game, and they do well. Mike Rose at Tourmaline. These are some of the people that I really admire in our industry. Clayton Wojtas at his various companies, which have increasingly been private companies, but he's always got a very deep interest and remarkable success.
Some CEOs, regardless of industry, are good at creating value for themselves and not necessarily the shareholders through salaries and stock options.
Yeah.
Like we said, you had skin in the game, so you had to create value for yourself. But how did you think about that? Was it just common sense running a business?
Well, I think, number one, the compensation for the very senior people in any company should be very heavily tied to the share price. Their long-term stock awards or their stock options or things like that do today play a very big part in what we pay CEOs of energy companies here in Calgary. And I think that's good. But I think also some boards are guilty of awarding big bonuses for mediocre performance and things like that. Here at ARC, we've tried to be very focused on that. At Finning, we're very focused on it, and I think Cenovus as well. So, I think it's appropriate if you want to convince people to come and put their significant talents to work on behalf of a big company in the energy industry. You're competing. Those people could go early in their career to the digital industries or to the banking industry or to some other manufacturing or trading or commercial enterprise. So if you want to attract people of that caliber, you got to pay them. And I think the right thing for boards to do is pay them in a way that's heavily dependent on results. And that's what we do.
Best deal financially you've seen so far?
Oh, wow. That's a tough question. I think if I went back to the 1970s, some of the deals that Dome did in the late 1970s, as commodity prices were rising rapidly and they were able to benefit from that, things like acquiring Ashland Oil Canada and acquiring Siemens Oil and Gas and Mesa assets in Canada, those were fantastic deals. But then they got a little full of themselves and they did the Hudson Bay deal. And it's not just that they did the Hudson Bay deal, which was admirable and remarkable, but they did it in quite a risky way. And that ultimately cost us the whole company. At Fletcher, we did about 10 reasonably good-sized transactions over the decade, and we spent a lot of money on drilling and development. But the interesting thing about Fletcher, every dime that the parent company put into that company, they had recovered all of that plus a rate of return on that before I left. And then after I left, when they sold the company for close to $2 billion, all of that was effectively a gain. So that whole series of relatively modest deals, like a big deal at Fletcher was $150 million, not $1.5 billion or $15 billion. But that whole series of $100 million deals turned out to be very successful and created a really good company. And it was sad that we ended up caught up in the parent company's larger problems and had to leave that. At TC, I think I would say the single best transaction that we ever did was entering Bruce Nuclear. That was a real winner. But I also mentioned acquiring A&R Pipeline in the U.S., which really established a big foothold in the U.S., acquiring the other 50% of Great Lakes Gas Transmission, and acquiring the GTN pipeline to California. Those were all terrific deals. The whole TC entry into Mexico and building a multi-billion-dollar pipeline business in Mexico on very attractive terms with good rates of return and in a way that really managed risk, I'd say that was a great deal. So those are the kind of things at TC. In a much more somber way, one of the very best deals I've ever been involved in, sadly, was selling Talisman to Repsol in a state of crisis and emergency and avoiding what almost certainly would have been the bankruptcy of Talisman if we hadn't done that. So there's one that none of us were happy with, but it had to be done. And sometimes it's hard to just bite the bullet and do those, but we understood that things were looking bad. We had to sell.
The crossroads of your career. Sometimes you can look back and at inflection points to see when things start to go really well. Do you remember a time when your career started to really tick upwards and go well?
Yeah, I think it was sort of a good news, bad news situation. It was when Dome was coming near the end. And the good news was that I ended up in a remarkable role there working with Howard McDonald, the CEO of the company. He needed somebody that understood the assets of the company really well. I'd been managing different engineering and development departments at Dome, so I knew the assets. And I was able to work very closely, almost one-on-one with Howard McDonald to find a buyer for Dome. That was a great experience that led to a bad outcome. We sold the company and I was unemployed. But that was clearly a trigger point because that's when I came to realize that you can't just count on the big company that you're working with continuing to succeed. You got to keep your eyes open and what's happening around you. And it also inspired me because of the people I'd met in working with Morgan Stanley and others on the sales process at Dome and seeing what Amoco was going to do to divest the Dome assets that they didn't want. That kind of opened my eyes to what could I do to go about building a company, which was the whole Fletcher Challenge thing. But it was the experience I gained in the sale of Dome that enabled me to apply that experience to build Fletcher Challenge and acquire assets and go from there. And so then you come to the end of the 90s, and maybe what I gained at Fletcher was the confidence to think that I could actually operate at a pretty high level in the bigger corporate world. Our little company in Canada was one thing, and it was a great entrepreneurial experience. But Fletcher Challenge globally was really quite a sophisticated company. And the guy that ran it, Hugh Fletcher, was one of the most strategic thinkers that I've ever met, and I was very fortunate to get to work reasonably closely with Hugh and understand how he looked at things. And so I then had the confidence to take that to TransCanada. And, we changed the company quite dramatically during the 10 years I was as CEO, and just happy the way it turned out. But those were kind of the three key inflection points in my career.
As any good Haskins student does, I read Mr. Dick Haskins' Northern Tigers book. Coincidentally, I was reading it about a month ago and came across the portion in the book with Mr. Haskins' comments on you. Mr. Hal Kvisle is one of the best chief executives I've ever known. Do you remember the day you met Mr. Dick Haskins?
Well, what was interesting, when George Watson was encouraging TransCanada to hire me to run the non-regulated side of the company, I got the call from the recruitment firm and said that Dick Haskins, the chair of the board, wants to meet with you. And I thought, well, this is great. I knew about the guy and I'd heard stories about him and he was well known, but I didn't know him. So Dick and I sat down just like this, one-on-one in a small meeting room at Corn Ferry, and we had a long discussion about things. And I was just so touched and impressed by his small town Alberta genuine personality and character. And somehow Dick and I hit it off quite well in that meeting, and we continued to build our relationship so that by the time Doug Baldwin was departing as the interim CEO at TC, Dick and I knew each other pretty well, and he'd developed the comfort and the confidence. And I'd be forever grateful to Dick for being willing to take a chance on me as the CEO of TransCanada. So, we've maintained our relationship ever since, and Dick helped me understand the role that I as the CEO could play in putting together the board of TransCanada. Some people would think that the chairman of the board or board members just decide who else should be on the board. Well, Dick engaged me in that. And he said, what kind of board members do you think would really be helpful? And so Dick and I went through a process and recruited about 10 people to that board, all of whom made extraordinary contributions. And That was entirely the open-minded curiosity and style of Dick Haskins to say, what could we do a little different than people have done in the past? He's an amazing man.
He thinks very highly of you, but to flip it on its head, to look at it from the other side, if you were to put your finger on 2 or 3 things that made Mr. Dick Haskins so successful, you kind of just mentioned one, what would you say?
One thing about Dick, he listens really carefully. He listens to what other people are saying, and he thinks and considers what they're saying. And if it doesn't make sense, he will, in a very gentlemanly way, respond that, have you thought about this or have you thought about that? So he's got this naturally inquiring mind, but he's also got a style that makes people comfortable, and it becomes very apparent that Dick doesn't have a hidden agenda. He wants whatever enterprise we're talking about to be successful. He wants the people there to be successful, and he wants it to work for Canada and Western Canada. So, it's all of those kind of, and I mean, when it comes to financial analysis and understanding the financial outlook for a business, Dick Haskins is really smart. It helps to have that. And so in addition to his extraordinary personality and his way of getting the best out of people, he also has a very sophisticated financial mind. And it doesn't matter what kind of a circumstance you're in his own way, Dick will almost always get to the right answer. And that's why he's been successful.
It's hard to imagine now with the level of success you've had being the chairman and CEO of companies, but the day you met Dick, were you nervous and were you stressed, or what was that like? The afternoon where you guys sat down for the interview?
Well, I guess I was certainly nervous. I'm walking in, and now it was interesting at the time. I wasn't aggressively looking for another job. George Watson had approached me. I had to think about, did I want to give up being the CEO of this North American enterprise within the larger Fletcher Challenge? Or did I want to go and do a senior VP role at a much different company, TransCanada? And so I was as curious to find out from Dick what he had in mind about the future as he was to learn from me. So of course I was nervous to go in for the first time sitting down with a legendary guy like Dick. But I also was very quickly relaxed by his style and his approach and just wanting to talk about things. I'd say Dick and I hit it off really well in that first 2-hour conversation, and we've been good friends ever since.
Some of the best investors and business leaders are proud of the fact that they like to change their minds. However, the capital markets oftentimes demand one-way decisions, and they like to see confidence in leaders. How do you balance those 2 attributes when leading a business to leave yourself open to error, but yet also have confidence?
That's a difficult challenge. I mean, it's got many aspects to it. One is, how do you balance off what the management team within a company has landed on as the right way forward versus what we're able to find out from our major institutional investors as to the way they think we should be going? How do you balance many investors' short-term priority for good results in the current quarter with what we're trying to do to build a company long-term? At ARC Resources here, there was kind of a classic situation, was the approval of the Attachie project, where we knew some investors wanted more cash distributions from the company. They wanted us to buy back more shares, raise the dividend, do all that. I'm all in favor of all that. But at the same time, we had this company-changing project called Attachie that we had worked and perfected and drilled more appraisal wells and done all of these things to reduce risk and improve our confidence in going ahead with Attachie. Well, Trevor, we were just about to go ahead with it when the court decision came out that basically shut down all drilling and development activity in Northeast BC. And that hiatus continued for a couple of years. So during that period, we continued to evaluate the project and think about what we could do to reduce risk and ensure the outcome. So when we finally announced about a year ago that we were going to go ahead and do Attachie, which is a big project, Terry and the team had talked to all of our major shareholders, and we were pleasantly surprised that we had good shareholder support for something we thought some big shareholders might be nervous about. Now, how do we maintain that constructive arrangement relationship? Number one, we've got to deliver on the Attachie project. Things are going well so far, but there's always more challenges. Look at the Trans Mountain project, where some very good friends of mine are deeply involved in trying to get that over the finish line. And here they are at the 11th hour with a really difficult problem that's delaying the project. Well, something like that could come upon us on our Attachie project, but we're right on top of it. So finding the balance between these things is, I think you just have to use a lot of common sense, have a very deep understanding of what your shareholders expect you to do. And if you need to do something other than what they're thinking, make sure you help them understand why you're doing that.
Keeping a open mind to the possibility of maybe error or things not going as you thought.
You can never predict perfectly how it's going to go. And I mean, look at where we're at today. 2 years ago, or a year and a half ago, we had a $7 natural gas wellhead price, and today it's about $1.50. And what caused this? Well, one of the things that caused us that high price did what it always does. Trevor, I've seen it over and over. As soon as the price is high, the drill bits come out.
Supply demand.
And we just ramp up the supply in the face of high price demand. And the industry corrects itself really quite quickly.
That aspect is known pretty widely. The supply demand, the commodity-like nature of natural gas, but having been in the sector for so long, how do you think about that? It's obvious that it's people drill on high prices and then they fall again. How do you deal with that? Low price structure?
Well, I think a low cost structure, number one. One of the other things we do at ARC is we own all of our own facilities. So we cover the costs of those facilities with the capital investment up front, but we don't pay processing fees to third parties, and that lowers our ongoing operating cost. And it also gives us a lot of options for growing production. When you own the plant, you can look at other ways to bring more gas into it. And I think having a relatively conservative commodity price forecast all the time is positive, and I think that's something that good companies do. You have to make sure, if you're, on all the work I did with Imperial Oil on the Mackenzie Valley project, they said the economics have to work with a $2 Alberta gas price. And I said, why do you do that? I said, the price at the time in 2007 was $5 or $6. Why are you so pessimistic on the gas price? Well, they said, we've been through this before. And sure enough, similarly at Cenovus, they test all of their major capital projects on a very conservative oil price, and we do the same here at ARC. So by far the single biggest thing that can whipsaw you from great success one year to great distress the next year is the commodity price. Some people get around it by hedging. At ARC, we found there's great value in holding long-haul transport so that we can get our gas out of Alberta, not to be bottlenecked here in Western Canada, I think is really important. But it comes at a cost. You have to make long-term commitments to have that pipeline space, and so you've got to analyze all of those things. But I think the most successful companies, and most notably people like Exxon and Chevron, are very sophisticated in terms of risk management and understanding the risks of what they're getting into. And everybody says that those big companies spend far too much money on their capital projects. First of all, they put out a cost estimate that's way too high, and then they actually spend it. Well, that's one side of the story. The other side of the story is that they've been through many of these big projects. And TMX is a great example, where a company, Kinder Morgan, that is not known as a big pipe builder. They're not even close to the scale of TransCanada or Enbridge when it comes to building pipe. Kinder's a big company, but they acquired a lot of assets along the way. And they put out a kind of rule of thumb cost estimate for building Trans Mountain that might have looked good at the time, but in hindsight was way, way off the market. And unfortunately, the government of Canada, not having any deep pipeline experience, stepped in and bought Trans Mountain on the assumption that the Kinder Morgan cost estimate was reasonable. Well, since more sophisticated people have gotten involved in that project, that $7 billion original cost estimate should never have been less than $18 billion, is what the detailed engineering reveals. And then you say, well, how do you go from $18 billion to $32 billion? And I'd say that for a federally regulated project in the mountains of British Columbia, whatever can go wrong will go wrong. And that's how it went from 18 to 32. So these are the problems with big projects. And, you know, here at ARC, we try to make sure that we go ahead with something like the Apache project in a very well-engineered, well-analyzed, well-planned way. And I'm betting these guys are going to bring it in on time, on budget. Full credit to them.
This is a total left field question. Maybe we'll cut it out. But did you ever meet Bob Dixon?
Early on, I mean, Bob Dixon was legendary back in the 80s with companies like Merlin.
Mm-hmm.
And I did meet Bob Dixon, you know, at some petroleum association meeting or something like that, but I didn't know him well. But I sure know what came out of all of that. The disciples of Bob Dixon that have run so many companies, you know, there's the real high profile ones like Alan Markin and Clayton Whitus, but many, many others as well. He was a remarkable guy. I wish I had known him, but no, I can't really say that I did.
I've read that one of his main ideas was to own your infrastructure 100% and your properties 100%. And that was one of the keys to his success. And,
yeah.
That reminded me of your comment of owning the infrastructure.
Yes. And of course, when you look at one of the great outcomes of Bob Dixon's theories, well, there's two of them, CNRL and Renaissance Energy. And Renaissance grew much more rapidly than CNRL in the day. They did do almost everything 100%. They did own all of their own infrastructure, but they kind of hit the wall because they continued to push the envelope drilling too aggressively, and eventually they just kind of hit the ceiling where their asset base couldn't sustain it. Alan Markin and Murray Edwards at CNRL took a different approach, longer, a little bit slower growth, worked out better in the end. CNRL is a great company. The third company that I really admired back in that era was Talisman. And under Jim Buckey, he took what had been sort of a sleepy subsidiary of British Petroleum, BP Canada, and did a whole series of transactions in the early 90s. And again, at Talisman, they generally owned their infrastructure. They did not operate at 100% just by nature of the assets they were in, particularly overseas. Most of them are joint ventures. But those were three great companies that all started around 1990, and with people that had learned from guys like Bob Dixon.
Right. What is SouthBow Energy or SouthBow Pipeline?
So SouthBow Energy is the standalone company that TC is spinning out. It will include all of TC's existing oil pipelines, primarily the Keystone Pipeline, plus the gathering pipelines in Alberta that feed Keystone, and the distribution connections down in the United States from kind of the Wood River, Illinois area to Cushing, Oklahoma, where there's a big storage facility, and connections to different refineries on the Gulf Coast of the U.S. That's what SouthBow will be. And, you know, in terms of the very large TC company, SouthBow is maybe 10 or 15% of the total TC. But that's still a pretty big company. You know, it would have a total enterprise value of between 12 and 15 billion, kind of in that range. These are not precise numbers. I'm not offering forecasts here, just trying to describe the business. So TC decided for larger corporate reasons, not focused on SouthBow itself, but on their overall growth plan and future strategic focus and capital requirements, that it was a good idea to spin SouthBow out into a separate company. And so when they asked me whether I'd be prepared to serve as the chair of the board of SouthBow, I was firstly honored to do it and very interested in doing it. And Trevor, for me, it's kind of full circle coming back to being involved with the Keystone Pipeline, which was all conceived and moved forward and built and brought into operation during my time. So I'm pretty close to the asset itself.
I guess the question is, why spin out SouthBow? The critic might say it only benefits the middleman and maybe some bankers that get in the middle of the deal. But from your perspective, why create the spin-off?
Well, as I said, I wasn't part of that decision, and I'm not really the right person to comment on it. But I think, it's pretty easy to see that from a strategic point of view, TC wants to progress in the direction of cleaner supplies of energy. They've done a great job, starting with Alex Porbay when I was there, but continuing more recently to build up the electricity side of that company. When I joined TC, we were nobodies on the power gen side. We had very, very small power gen facilities, and over time grown that into one of the biggest generators in Canada. And Bruce Nuclear and some of the gas-fired plants have been part of that. So TC is a significant electricity player. They're obviously a very significant natural gas player. And the integration of the natural gas value chain with the electricity value chain and the addition of renewables, wind and solar, where there's a natural synergy, I guess I would say, between wind power and gas power. One can run when the other's not able to, and they go back and forth. I think those are some of the things, and I'm not speaking for the TC board because I'm not part of that, but as a shareholder, and I am a significant TC shareholder and a very strong supporter of the company, I can see that that kind of a strategic shift would make sense. And then they've got to ask the question, what do we do about this one big oil pipeline asset that we have? And if we're investing heavily in wind and solar, natural gas transmission and nuclear power, are we going to have capital available to continue to pursue opportunities on the oil pipe side? And when you make those strategic decisions, the right answer is probably not, or probably not. So let's spin it out as a separate entity. Let's give it a good management team, put a highly competent board in place, which I'm delighted that we've been able to work on that. And let's see what it can do as a separate company. And we're not selling it off to somebody else. We're distributing it out to the existing shareholders. So those shareholders who are happy owning a piece of an oil pipeline company will continue to own a piece of an oil pipe company. So I think it's a good step.
The subject of egress. When TMX is done, do you see more pipelines getting built?
Well, Trevor, the remarkable situation that we're in and that Canada's in is that the oil sands industry is the largest industry in this country. And it's a very significant contributor to the overall well-being of not just Alberta, but Canada as a whole. And in 2015, the Trudeau government was elected with a determined objective of dramatically reducing operations and emissions in the oil sands. Some of the key people in the Trudeau government had told me before they were elected and before they were in power that their objective was going to be to shut down the oil sands by 2025. That was the backroom objective of that government as they came into power. And what's particularly interesting to me is that since the Trudeau government was elected, we have grown oil sands production by 1 million barrels a day. And today Canada's the third or fourth largest producer. I think the third largest reserves and the fourth largest producer. And here we sit close to 5 million barrels a day, 3.5 million of which come from the oil sands. And it's been a great story. Now, when TMX comes on, it's going to move about 600,000 barrels a day. And it'll probably bring, there's 200,000 or 300,000 barrels a day right now that moves by rail. That will probably cut back. And it'll be good to be able to access the Pacific coast and to be able to access international markets directly without having to go through the U.S. Gulf Coast. But it's not maybe the ultimate long-term solution. I really admire Premier Daniel Smith's objective to grow oil sands production from 3.5 million barrels a day to 6. She says, why not? We've got the reserves and the global demand is out there. Now, I'm not opposed to the climate change agenda, and I'm not opposed to environmental initiatives. But I kind of align with the thinking in Norway, where the energy minister in Norway says, as long as the globe continues to demand oil and gas, we'll continue to produce it. When the demand dries up, well, that's the signal to stop producing it. And I'm not seeing any signals or indications that global demand for oil and gas are declining. They're not declining. They increase every year. And, it's 30 years ago that governments started setting aggressive targets and objectives for greenhouse gas reduction. 1995, Kyoto. And I was at Fletcher and I was on the CAP board at the time. And we were wondering, what are we supposed to do here? Prime Minister Chrétien has gone and committed to a significant reduction in emissions. Well, Canada has not reduced its emissions. Nobody's reduced their emissions. The only significant reductions really have come in the United States, where they have transitioned from coal-fired power plants to natural gas, thereby reducing power gen emissions by 50%. We need to do more of that here. But unfortunately, the federal government has not only been frustrated in their efforts to curtail production at the oil sands, but they put significant barriers in place that prevent us from doing more with natural gas, whether it's more power gen in Canada or more exports of LNG to global markets. We need federal support, not federal interference, and I think that's the situation that we're dealing with today.
Do you think more pipelines will get built?
Yeah, I do. More pipelines will absolutely get built. I don't think any more will get built until a number of barriers are removed. And I'm very interested that one of the toughest challenges that we faced in the last 25 years is how to work more closely with Indigenous people and how to have more respect for their history in this part of the world and those kind of things. And I'm really happy to see right now that more and more Indigenous people are more supportive of major energy projects than they are of the federal government's initiatives to shut them down. And so that's quite positive. And I think that's one. The other one, Bill C-69, the No More Pipelines Act, has to be revisited and reviewed. And Trevor, it was around 2010 to 2013 that I did quite a bit of work with Environment Minister Jim Prentice in the federal government. And we had mapped out what the key elements of Canadian greenhouse gas and environmental policy ought to be. And we had brought a whole spectrum of industry leaders to the table to talk about how we could go ahead and accomplish those things. And I'd just like to touch on the four principles that formed the conclusions to our thinking. The first one was that all the coal generators were there, including the big Alberta power generators, and we agreed that the signals were clear. We had to shut down our coal-fired power plants. But we reached an agreement among industry leaders and with the federal government that each major coal plant would shut down as it reached the end of its primary term, and we in industry would not attempt to do life extensions, which is the norm. Normally people extend these things many times, but that by letting them run out their primary term, most plants would recover 90 to 100% of the invested capital. In other words, we'd get our money back out of the building of all of these plants. That was point number one. Point number two, the federal government was talking about an obscure concept called the Clean Fuel Standard, which was how do you encourage people to move from dirtier fuels like coal or heavy fuel oil or even diesel to cleaner fuels. So we in industry embraced the notion of a clean fuel standard and agreed with the federal government that for the next 20 years, the clean fuel standard would be natural gas so that we could maximize the conversion of power gen to natural gas, look at converting long-haul diesel trains to natural gas, converting more ships to natural gas, and even big highway trucks and things like that. And here in Calgary, there are city buses that run on natural gas. So it's all doable. But there, instead of establishing natural gas as the clean fuel standard, the Trudeau government imposed a carbon tax on natural gas and effectively destroyed the economics of converting dirtier applications to natural gas. And that was tragic. That's been a real problem. and one of the first things that need to be corrected once we're through this current era. The third key point of our strategy was we have to remain at all times reasonably aligned with the United States. We don't have to exactly do what the Americans are doing, but if we fall behind on the climate agenda, they will impose free trade sanctions on us. If we get too far ahead of them, our companies will be bearing cost burdens that render us uncompetitive. So you've got to find that sweet spot of remaining reasonably aligned with the U.S. And again, we've deviated dramatically from that. We've become far more aggressive in Canada about shutting things down and curtailing activities than in the U.S. And the fourth point, we all agreed that Canada needs to really revisit its regulatory process, because even before 2010, it was a nightmare. For us to spend 7 years on the Mackenzie Valley regulatory process only to get to the answer that we knew we'd get to, which is that it was a good project. But by the time 7 years had gone by, the market had changed and it was no longer viable. We had to get around that. And so some initial small steps were taken by the Harper government, much to their credit, to make, for example, interveners in regulatory process demonstrate that they had something to do with the project at hand. Well, all of that was stripped away. Not only were all of those changes reversed, but then Bill C-69 was introduced, which has made it virtually impossible to bring anything forward. So these things have to change. And I think a good starting point is to revert back to what industry and government landed on as those four big principles in about 2012, I think that was.
LNG is good for the overall economy, but to what extent do you think it is to, say, Asia and helping with their carbon profile?
Well, we played a big role in North America by increasing emissions in Asia as we shifted so much manufacturing from North America to Asia and relied on them to produce this stuff rather than producing it at home. That's one factor that's occurred over the last 25 years. Now, in order to run those industries, you hear the stories about China bringing on stream 2 new coal plants every month or whatever. I'm not quoting exact figures here, but they've added a lot of coal-fired generation in China, in India, and in all of those other countries in between China and India, where there's another billion people. And so this is all going on over there, and I think it's quite a reasonable proposition for us to export more LNG, for Australia to export more LNG, for Qatar to export more, and for the Americans to export more, so that increasingly the power gen fleet in India, China, and Southeast Asia can convert from coal to natural gas and cut emissions by more than 50% right there, just by doing that. So it's a very sensible case. And where does the opposition come? It's the extreme activists for whom nothing short of getting completely off hydrocarbons is acceptable. They're not prepared to cut emissions 50% by going to something doable. They insist we cut them by 100. Well, that means we're going to continue to do what we've done for 30 years, which is set these big objectives and not meet any of them. And we'll continue to do that. So I'm a big proponent of it. Now, the other interesting thing, Trevor, I like to talk about Canada having two multi-trillion-dollar assets. And when you look around the world at things like the diamond and gold mines of South Africa and the gas resource base of Russia and the oil hydrocarbons of Saudi Arabia and everything in Venezuela that they continue to fumble, these are the trillion-dollar assets that you see existing. The Permian and the Marcellus would be two in the U.S. Well, we have two of them in Canada. I can only identify two. One of them is the oil sands, and the other is the tight gas, the Montney, the Duvernay, the Deep Basin, all of our resources of those two things. These are assets of enormous economic value. And one of the challenges that I see today is how do you convince the urban population of Vancouver to be more supportive of natural gas development in Northeast BC, where about 50% of Canada's total developable gas is in Northeast BC. And it's reasonably close to Kitimat or Prince Rupert or other export locations. We've successfully got Coastal GasLink built, and LNG Canada is going to come on stream soon. And there's half a dozen other significant LNG projects that are moving forward. And ARC here is very supportive of those. It just seems to me that BC could almost on its own build a very significant global LNG export business. And urban thinking in Vancouver doesn't always appreciate that or see it. So we just have to keep at it and try to help get that message across. One last thing on all of that I think is important in Alberta is one of the tragic events that happened is shortly after the Trudeau government and the Notley government were elected, they reached agreement to effectively accelerate the shutdown of 4,000 megawatts of coal-fired power in Alberta on a greatly accelerated schedule and replace it with 4,000 megawatts of wind and solar. And that sounds good, but the problem is wind and solar only run a third of the time, whereas coal plants run all the time. And so we took a very highly dependable, reliable source of power and replaced it with something that is not. But there is a great answer here. First of all, if you replace coal power with natural gas, right off the bat, you'll cut emissions by 50%. Then if you combine your gas generation fleet with an equal number of megawatts of wind and solar capacity, so here in Alberta we need 15,000 megawatts of gas and 15,000 megawatts of wind and solar. The wind and solar will run a third of the time with no emissions. The natural gas will run 2/3 of the time with half the emissions of coal. You put all of that together, and you end up reducing emissions by 75 or 80%, and you have a perfectly reliable generation system. That's what we need to do, and that's the kind of thinking that I think will get us through all of the current challenges that we have here.
To protect yourself from the black swan, the week or two of -30 in January, February, maybe one of the solutions to prevent the catastrophe from occurring in that scenario.
And, we inevitably have these situations in December last year or January this year. It was December of 22 and January of 24, where due to very cold weather, demand was very, very high. There were a couple of plants that were offline for normal maintenance, or most recently, there was the one big plant, Cascade, near Edson, that was not online simply because it hadn't finished construction yet. They were just finishing off that project. And when it gets that cold, the wind dies down. And of course, in December and January, there's not a lot of solar power. So you run into this bit of a problem. And I think where people have missed the boat is they've thought, well, we could just build all of this wind and solar, but you need to appreciate that you need 1 megawatt of an alternative supply for every megawatt of wind and solar. We can maybe get around that at some point in the future if we have enough hydro storage facilities or if battery technology moves ahead. But we're not there today. So the magic combination is wind and solar on the renewable side with an equal megawattage of natural gas, and the two can work really well together. And by developing that system in Alberta, we can reduce emissions by close to 80% relative to where we were before on coal. And yet we can have a completely reliable system. That's what I encourage people to look at.
And the value of redundancy, making yourself anti-fragile, maybe one way to put it.
Yeah, I think, it's going to cost more money, and it'll be power under that model will be more expensive than if you just relied solely on natural gas. But on the other hand, you're cleaner and you're progressing what I think is obviously a very important business. Alberta's often vilified as a bad actor on the environmental stage, and I disagree pretty strongly with that. We've done more wind and solar development here in Alberta than the rest of the country put together, and we'll continue to do that.
Well, that's awesome. Maybe to end things on a lighter note, to wrap up the conversation, favorite time in your career thus far?
I'd have to recite about, just very quickly, 4 favorite times in my career. One is to be part of that explosive growth at Dome. I mean, it was like, we were like the Rolling Stones of the energy industry. It was an amazing time. Dome went from a nobody to being the largest oil and gas company in Canada in 6 years. And I was there for those 6 years. And it was just remarkable. The next really favorite time was to go through the process of starting Fletcher Challenge Energy from a state where I had a little office in a consulting firm and two other guys working for me had desks in the hallway. And that's how we started that company. And to grow it from there into really quite a successful, and it was just a wonderful culture and atmosphere and collegial work environment at Fletcher. People loved working together and we all got along well, and I think it was a great experience. To then TransCanada, where the best parts of that job were the hours, sometimes late into the evening, that I'd spend with either Alex Porbay on the power side or Dennis McConaughey and Don Wishart on the pipeline side and Russ Girling on the financial side, thinking through which of these very big world-scale opportunities are we going to put ourselves behind, really get behind. Those were great times. And then even Talisman, at the end of the day was a failure. We were unable to turn that company around. But it was a great experience, primarily because of the remarkable people I met at Talisman. That was a really extraordinary organization, and it's just too bad that they were taken down by some of the historic deals that have been done and some of the very difficult assets that they had in the North Sea particularly. But what a remarkable organization and culture, Talisman. It was a great place.
Advice to a young person entering the energy business or business in general, what would you tell them?
Well, I'd say look for employment in a role and in an industry and in a career where there's real opportunity to grow. There are all kinds of interesting jobs these days in the high-tech sector, but a little hard to see where it will go. There's a lot of upside, but a lot of risk. Not everybody pulls off an NVIDIA. Those things don't happen every day. I say don't write off too quickly the oil and gas industry here in Alberta. And it's not just the resource base that we've got, but the incredible deep pool of talent. And I think some of the most exceptional people in the country work in the oil and gas industry here in Calgary. And get involved in it, learn from them, and see where it goes from here. It probably won't be the same industry 20 years from now that it is today, but it will be here, and we just don't know which way it'll evolve, but it'll be very interesting. So I think Alberta's a great place to be, a great place to build a career, and a great business and entrepreneurial attitude here. So don't leave Alberta too quickly.
Well, I think that's a good place to leave the conversation. So thank you very much. We can end the formal conversation there.
Okay, well, thank you, Trevor. Thank you for doing this.
Hello, listeners out there. Thanks for checking out the podcast. Hopefully the episode provided some insights. If you enjoyed the show, check out trose.ca where more episodes are yet to come. You can also subscribe to the podcast where your token of support is much appreciated. Until next time, happy coffee drinking.